So, you're thinking about moving to Palm Coast, Florida, but you want to know more about mortgage rates? That's exactly what we're going to cover in today's video. We're going to take a look at two impactful factors that affect whether mortgage rates go up or down, and we're going to kind of take a deep dive on those. If that sounds like something you're interested in, then stick around because we're going to get after it right now. Hi, my name is Stephanie Schulis with Keller Williams Realty. Thanks so much for joining us today. If this is your first time to the channel, please make sure to tap that button below to subscribe, hit that bell for notifications so you can be the first to be notified anytime we put out new content all about Palm Coast, Florida living and moving to Palm Coast, Florida and the surrounding areas. We get calls, texts, and emails from people just like you looking to make the move to Palm Coast, Florida every single day. We absolutely love it. So whether you're thinking about making the move in the next 9 days or 90 days, give us a call, shoot us a text, send us an email, and we'll do everything we can to help you make a smooth move to Palm Coast, Florida. If you're thinking about buying a home, you've probably been paying very close attention to mortgage rates. Over the last couple of years, they hit record lows and then rose dramatically and are now falling back down a bit. The reason they're doing that is really complicated because there's a lot of different things that can influence mortgage rates. Today, we're going to take a look at the two biggest impactful factors that affect the mortgage rates. You've probably heard people say the Fed is expected to raise the rate today. The Fed is expected to drop the rate today. What does that mean? How does it play into mortgage rates? The Fed is the Federal Reserve, and it doesn't directly determine mortgage rates. But the Fed does move the federal funds rate, which is the rate that people are talking about when they say the Fed is expected to drop or raise the rate. So the Fed does move the federal funds rate up and down in response to what's happening with inflation, the economy, employment rates, and so much more. As the federal funds rate moves, mortgage rates tend to respond. Business Insider says the Federal Reserve slows inflation by raising the federal funds rate, which can indirectly impact mortgages. High inflation and investor expectations of more Fed rate hikes can push mortgage rates up. If investors believe the Fed may cut rates and inflation is decelerating, mortgage rates will typically trend down. Over the last couple of years, the Fed has raised the federal fund rate to try and fight inflation. And as that happened, mortgage rates jumped up. Fortunately, the expert outlook for inflation and mortgage rates is that both should be more favorable over the course of the year. There's even talk that the Fed may actually cut the Fed funds rate this year because inflation is cooling, even though it's not back to that ideal target yet. The other factor that impacts mortgage rates is the 10-year Treasury yield. They look at the 10-year Treasury yield to decide how much interest to charge on the loans. If the yield goes up, mortgage rates generally go up too. The opposite, of course, is also true. Investopedia says one frequently used government bond benchmark to which mortgage lenders often peg their interest rates is the 10-year Treasury yield. Historically, the spread between the 10-year Treasury yield and the 30-year fixed mortgage rate has been fairly consistent, but that's not the case recently. That means that there's room for mortgage rates to come down. So keeping an eye on which way the Treasury yield is trending can give experts more of an idea of where mortgage rates may be headed. The industry is going to be keeping a close watch to see what the Fed does and what the 10-year Treasury bond does. They both have impacts on the mortgage rates without having a direct relationship with the mortgage rates. To navigate any mortgage rate changes and impact for your moving plans, it's best that you have a team of professionals that is talking with you about your goals, about your needs, and really working with you to make sure that you're taking advantage of the market and the market expectations. If you have any questions on what affects a mortgage rate and how that mortgage rate affects your ability as a buyer, feel free to leave a comment below. You can always give us a call, shoot us a text. We love hearing from you. That's it for today's video. We'll see you on the next one.